What is up? What is up? What is going on, everybody? Welcome back for another edition of REI Genius Live. I'm your host, Johnny Lynham, the military CEO, and we got a lot of data to dive in tonight. Tonight, we won't be having any guests, but we're going to be diving into some of the Alabama real estate market data. We're going to kind of go across the top four MSAs, major statistical areas. So we're going to dive into Montgomery, Birmingham, Mobile, and then Huntsville. Yeah, how can we forget Huntsville? So welcome, welcome, welcome. A couple things just for us house business. A couple things coming up. We do have the Houston event. We're going to be live in Houston, Texas, February 22nd through the 25th. A 4-day event. We're going to be diving into one subject to. We're going to be partnering up with Gene Boykins. He is throwing his second Break the Money Code event in Houston, Texas. And he's going to be talking about how to become the bank and the subject to process with taking over existing home mortgages. Of course, I'm going to be talking about buying multifamily and how to raise private money, how to bring money to your deals. If you don't have a lot of money, then this is the event for you because we're going to be talking about that process. What's going on, Daniel? Good evening. Good evening. And so we're going to be diving that into Houston, 4 whole days that we're going to be changing lives and transforming lives through real estate. And so I love going to live events. I try to get at least one live event in that I tend to kind of get poured into as well, just because the transformation that happens. You can check out from everything from the business, the hustle and bustle, the grind, from everyday life, and focus in on what it is that you're trying to learn when it comes to real estate investing. And so that's one of the things that I'm super excited about with that. The morning of the 22nd, I'm going to be in Birmingham, Alabama, at the annual Alabama Commercial Real Estate Conference put on by the University of Alabama Real Estate School, Roll Tide, and looking super excited for that. I think they still have tickets available. If you're interested to kind of learn what's going on across the state of Alabama in regards to commercial real estate, you're going to have a lot of different players that have an impact on commercial real estate in the room in regards to property management companies. You're going to have investors like myself that are going to be in the room. You're going to have some of the federal agencies or state agencies like with HUD that are in the room that provide a lot of different resources and funding for apartment investors to build new construction. But then also you're going to have banks there. And one of the great, we met with Community Bank last year when I was there. I met one of the vice presidents. I'm actually having a meeting with them while I'm there, boots on the ground, the 21st, the day before the conference, to kind of talk about some of the things that we're looking to do with some of our cash out refinances with our multifamily portfolio that we have there in the state. So it's a lot of players in the room. Don't miss it. If you're interested in getting in multifamily, that is the place to be. Last year we had I think it was the president of the Alabama Pension Fund who actually invests all of the funds that the Alabama government and state employees, their pension. He operates that capital and deploys into different investments. So it's really cool to get his perspective on where things were last February. And then also this year and last year, we had the Federal Reserve chief from Atlanta, Georgia, who's going to be there giving a keynote speech. So a lot of heavy hitters, a lot of good information on how you can level up in commercial real estate. So if you're in Alabama, Birmingham, February 22nd to be there. I'll be there. I know a couple of my clients, they're going to be in the room, and we're going to be there half a day. Then we're going to catch a flight at 1:30, headed to Texas, Houston, Texas, and be there for Breaking the Money Code. So without any further ado, let's dive into the Alabama real estate market. So of course, I primarily focus on multifamily, but we still do single family deals as well. And for most investors, the single family is going to be the asset class of choice. And a lot of investors, they just start with single families. I did the same way. Right now, we have a property in Huntsville that we're going to put on the market here next week. And so we're still operating in the single family space as well, too, and just kind of tracking the market. So we're going to start in Montgomery. So looking at the data, and all this data is based off Redfin. So you can go to redfin.com and kind of dive into it. But right now, so the average single family home price in Montgomery is $167,000. It's down almost 7.5% from this time last year. And right now, the average price per square foot in Montgomery is $95 a square foot, up 8% with the price per square foot compared to last year. So kind of looking in at the data right now, the average sale price is $166,000 over the past, I think the past month, it was 176 homes that were sold, which is month to month, year over year. Looking back this time last year, that's down a little bit, about 8%. And then also looking at here that the median days on market. So the days on market is 76. And so this is one of the key metrics you want to look at, because look at that number, that it's increased 21 days. So right now, in order to close, for the days on market is up almost 3 weeks. And so if you kind of look back at it, this time last year, houses in Montgomery were selling for, doing public math, what is that? They were selling for 55 days. So it was 55 days on the market on average last year, and now we're around 76. Now, kind of focusing in on that, the market. So they're still saying the market is somewhat competitive. Home selling in 60 days. The average home sales for about 4% below list price. So if they're listing a house for 200,000, they're going to sell it for, what is that, 8,000. 4% off is going to be roughly around 192,000. So they're going to be $8,000 below the list price when they sell. And hot homes in the area. So in some of the best zip codes in the Montgomery market, you can expect for things to sell a little bit faster. And that's the case across the U.S. If you're in a hot zip code, that things usually move a little bit faster than the rest of the market. And you're looking about 33 days to go pending to have a contract if you're in one of those areas. So looking at that, that's kind of the data right here. 95% for the sale to list price, which this is actually one of the lowest in the top 4 markets in Alabama, with the sale to list price being the lowest here in Montgomery. And it's only 16% of the homes sold above list price. So the thing with that is you still have houses that are selling above list price, especially when you're in the market like Montgomery, where the average median home price is $166,000. That's still affordable, even in the high interest rate environment that we're in right now. You're still seeing people if it's in the right zip code, people are still willing to pay a premium, a little bit more above the list price, to get the right home that they want to be in. And so 16.5% is that number for people that are still paying above list price. Going into Huntsville. Huntsville is kind of the darling when you start talking about the Alabama market. They have all the historic things that we look for as real estate investors. It's got the job growth, where jobs are just flooding into the Huntsville market. 2, you have the population growth, where there's just troves and troves of people coming in. And we're going to actually get in some of the market trends on where people are coming from and where people are leaving and going to from Huntsville. But looking at Huntsville, so compared to Montgomery, where it was 66 days on the market, in Huntsville, houses selling about 51 days. So a little bit better. But look at that huge jump in regards to the price. That the price in Huntsville is nearly double what it is in Montgomery, where the median sale price in Montgomery was $166,000. In Huntsville, that median home price is selling at $314,000. It's almost twice as much as in Montgomery. And we know in Montgomery, we looked at the data that we're around $96 per square foot. And in Huntsville, it's $159 per square foot. So you're seeing that now a little bit over $60 more per square foot. And that price is up 1.3% from last year. A lot of doom and gloom people are talking, hey, we're having a crash. Real estate is going to lose value over the next, year or two. It's going to go down 20, 30, 40%. We're going to have another repeat of 08. And the data is not supporting that. Prices are actually going up. So right now in 2024, Huntsville prices are 1.3% more expensive than they were last year, just based off the data. That I tell people that the best time to buy real estate was 20 years ago, and the next best time to buy is today. And going into this, we're looking at right now on average home sale for around 51 days, compared to last year was 42 days. So it's gotten a little bit. It depends on what side of the coin. If you're a seller, it's gotten worse because you're selling in 51 days instead of 42. But if you're a buyer, now you're having more opportunity to look at more homes, because the market isn't as competitive. Things aren't going under contract as fast as last year. Kind of looking at the data, so that median sales price, $313,000. The number of homes sold year over year is 257. So that's a little bit less. So less homes that have sold. And this goes with the trend across of America right now, that with the high interest rates, that transactions just dropped. We were over 6 million transactions at the height of the market going into 2023, as we coming out of 2022, that fall that we peaked. And now I think we were around 3.7 million transactions a couple months ago, which we think is the bottom of the market. So definitely here, not as a drastic trend in homes sold, but year over year, there are less homes that have sold in the Huntsville market, which is not a shocker. Median days on market, as we just talked about, it's up from 42 to 51. So increased days on market, which isn't bad. But it is still kind of hot. 48 days. The equilibrium point between the buyer's market and the seller's market is about 6 months of worth of inventory, and right now we got about 48 days worth of inventory. So that's one of the things that kind of gives you that test. So still less than 2 months inventory, which is still pretty hot. And so looking in at the data with the sales, the list price, that you see that once the listing price is a little bit better, we're around 95% in Montgomery, but here in Huntsville is around 97, almost 98%. So if a house is listed for 200,000, which would be phenomenal in the Huntsville market, because actually I'll tell you that our property that we're about to list in Huntsville, we're listing at 185,000. It's a three bedroom, 1 bath, about 1,200 square foot in the Huntsville market. So if you know anybody that's interested looking for a single family house, this was going to be on the market for about 185, which is way below the average 300, the median home price of 313 in the market. And that's kind of the sweet spot on the single family side. We focus on sub median prices, whereas that now it's a larger pool of buyers looking for the cheaper homes to get into. And that's why we focus on entry and starter level homes. But that's a whole nother video, whole nother episode. But we kind of look at homes sold above list price. So it's a little bit less. So remember, Montgomery was 16%. In Huntsville, only about 13.6% of houses are selling above list price. And when you look back to this time last year, it was super hot, that you had over 21% of the houses in the market being sold above list price. So, but it's dropped about 9 points for where it was last year. So migration and relocation trends. So Huntsville has a lot more data than Montgomery, but right now, kind of looking at where data was at for the last, I think this is for the last 3 months, that people looking at inflow and outflow of the market right now, that most people who have been moving in the market, that they're coming from, they're staying, 69% are choosing to stay within the metro market. And only around, 0.23% of home buyers search to move into Huntsville from outside metros. So the data, I don't know how they come up with the data, but it's not a whole lot for us, the numbers. But when you look at Gadsden was the most popular destination among Huntsville home buyers, followed by Knoxville and Palm Bay. So we know Knoxville is not that far from Huntsville. So looking at the destination for people that are in Huntsville and outside of Huntsville, looking there, coming from Gadsden and Knoxville is what Redfin is telling us with the data. So one of the things that really shocked me going through the data and the update was Mobile. And we're going to you'll see why with the data. So the average or median sale price in Mobile is $186,000. So definitely less than where Huntsville is at, but about $20,000 higher than Montgomery was. And home sale prices are up about 1%. So that whole trend that everybody's saying, hey, the market's crashing, no, prices are actually up 1% year over year. And right now, the Mobile price per square foot is $112 per square foot. So not terrible. Definitely lower than Huntsville, but above, what was that? They were at 96. So about $16 more expensive than Montgomery. And that price is down 2.6%. So you're seeing the price per square foot has come down a little bit. But the big thing that we're seeing right now, if you look at it, on average, homes in Mobile on average sell after only 27 days on the market compared to 21 days last year. The average house last year in Mobile sold in 3 weeks, which is just crazy. And now, right now, the average home in Mobile sells in less than a month, in 27 days. So that was something that really popped out in the data. And that's down from 128 homes sold in December this year, which is down from 134. So right there, not too far off from last year's data. But you see that the price, $185,000 for a median sale price in Mobile, 128 homes sold in the month of December, and the average days on market was only 27 days. So if you're buying real estate, you're looking at doing some fix and flips, if you're in the right neighborhood in Mobile, you're not going to sit on it too long that is buying up. And that's why we look at with Mobile, that you have a lot of jobs still coming into the area. It's right across the bay from one of the largest growing areas in the U.S. with the Daphne Spanish Fort, Fairhope area there in Baldwin County. That's one of the great areas. A lot of jobs and a lot of people choosing to live there. So it's a lot of good things going on in Mobile. So right now it's competitive. Average home sales for about 4% below list price. So kind of right there around where Montgomery was at 5%. And homes go pending and go under contract in around 25 days. Hot homes can sell for about 1% above list price and go pending in around 7 days. So that's definitely better than Huntsville. That if you got a hot house in Mobile, you're going under contract in the first week, which is great. And here's the data here that just shows that 22% of the homes are sold above list price. And that, guess what, y'all? That's down 9% from year over year. So last year, roughly 30% of the homes sold in Mobile were sold above list price. And it just talks about the market. And that's the thing. If you, the last 2-3 years coming out of COVID, if you were an owner and you own real estate, that you've seen mass appreciation, you've seen anywhere from 25 to 40% appreciation in the valuation of your home or your multifamily property. If you didn't own, all you saw was your rent go up, your rent go higher, inflation, your expenses got more expensive, and your dollar goes a lot less. And so that's why I'm a huge proponent. I'm always preaching own assets, own assets, own assets. And guess what? Real estate is one of the biggest hedges against inflation. Because guess what? If you don't own any assets out here, you're going to always be somebody else's asset. And that's the thing that we got to realize when we're doing everything, that we got to look a little bit more long term and understand, hey, the expenses that we have and how we can become an owner. And there's so many different creative ways where you don't have to have all the money. The big one I hear people is like, my credit's not perfect and I don't have a lot of money. And those are limited beliefs, because you can do deals and get in the market out here without having money and without having your own personal credit. And that's the thing you got to realize, that you got to be resourceful and not focus on the lack of resources. And once you do that, that it will literally change your life. But this is what I love diving into this data, because it just shows you that, hey, there's a lot of activity out here. It's not all doom and gloom. The market's not crashing. That if you're out here, you got the right property in the right area, it's going to sell. And guess what? If you're owning real estate, rents are going up, the valuation is going up, and now you got more equity that you can tap into to buy more real assets to own. And that's one of the reasons that we've seen the last few years, that you saw all the Wall Street hedge funds, the large institutions that started buying single family homes, because when you print trillions of dollars, like we did during COVID, that it drives inflation, because there's too much money in circulation. And guess what? When there's too much money in circulation, now you got a lot of money looking to be deployed somewhere, and there's only limited houses. There haven't been a lot of houses built over the last decade. And so now you've seen the run up with people who have money that are looking to buy assets. And that's why the hedge funds came in, because guess what? They knew that prices were going up because it's a hedge against inflation. Guess what? Because as you go have more and more inflation, it takes more of those same dollars to buy that same house. And so that's the thing that we love with being able to buy real estate and wait for the appreciation long term that comes in to happen. And that's what you want to do. So looking at the data right now, where are people kind of jumping in here? Not a lot of data points here. 35% of Mobile home buyers search to move out of Mobile, while 65% look to stay within the metro area. Chicago home buyers search to move into Mobile more than any other metro, followed by Atlanta and Los Angeles. That's interesting. And that warrants to see, hey, is there a big industry that's leaving Chicago that maybe has a headquarters in Mobile, and now they're looking at relocating a lot of people there, because they're just really looking at searches on Redfin data to drive and see, hey, where are people migrating to? Right now, it looks like 65% of Mobile home buyers were searching to stay within the metro area. And then Pensacola was the most popular destination among Mobile home buyers, followed by Destin and Savannah. So a little data, people that's leaving Mobile, looks like they're going to Pensacola, Destin, and Savannah for it's just a data point. And Birmingham, my home away from home. Birmingham's kind of close there with Mobile, $186,000 for the median sales price, which is down about 7% from last year. And price per square foot is $108, which is up 12.5% since last year. So that's the thing. So when you see that, whereas that the price is coming down, but the price per square foot is going up, what you're seeing is a lot of smaller houses are what's being transacted and selling. Because guess what? The price per square foot is getting higher, but the price is coming down. That means that houses that are being sold are smaller when you have those two trends that are going. But one of the things that's looking at it, 56 days on the market compared to 54 days last year. So Birmingham is steady, holding strong. 212 homes sold in December this year, up from 181 last year. So a few more transactions in December compared to next year. And that's the thing that we're going to be seeing a lot of markets, whereas that the spring season started early. And for what we're seeing with Alabama, just where the market is, that the days on market isn't that high. And so we're going to be saying, I think we're going to be seeing a strong summer if rates hold. I know rates the last few days have gone up after the latest information from the Federal Reserve. But I think overall, there's going to be a lot of people who didn't buy because rates were around 8% last year that are coming out and going to be looking to move this spring. Kind of looking at the data here, 56 days on market, 212 homes sold in the month of December, which we just talked about, and really just diving into to the market. And so right now, homes are selling 3% below list price, so not terrible, not too far off those 52 days. And then the hot homes in the market are selling 1% above list price and go pending in around 27 days. Now, we just talked about in Mobile, a hot house in Mobile is selling a little bit above list price and it's going pending in a week and 7 days. Right now, you can see the difference that hot homes in Mobile go pending in 27 days, almost in 30 days. So it's a little bit different. So Mobile is definitely is a little bit hotter than what Birmingham is experiencing right now. And then kind of the sales to list price with the data that we saw, 22% of the homes that went under contract in December was over list price. So you still got some competition that's going out there. And when you look at the data a little bit closer, we won't be able to see it here, but the homes that are on the lower end, below the median sale price, there's an enormous amount of competition for the cheaper homes, the lower price homes. And so that's the sweet spot. If you can get deals under 200,000, under 100,000 and buy, like the home we purchased in Huntsville, we bought that one for 87,000. We put about 40,000 in it, and the list price is going to be 185. And so if you can get those deals sub 100K, you're going to be good all day, and you're going to have some really good quality projects that you can take and put to market, and they should go pretty good. Just looking at the data. And I think overall that was it. Do we have any questions? I'm gonna jump out of presentation mode here and see what we got in regards to any questions. Anybody have any just general real estate questions? Definitely drop those in the chat. I wanted to kind of walk through the data, and one of the things that I wanted to offer up too, if you haven't got my 7 mistakes investors make, and this really was me talking about building up my $10 million plus portfolio, what were the mistakes that I made. And so capturing the top 7 mistakes that I made on my real estate investing journey. I wanted to share that with you guys. You can download it there at that link. Seven mistakes that investors make. Just want to offer that up as a kind of a good read. I think it's about 20 pages. It's pretty in depth with the questions there. But yeah, it's a great time to be getting into real estate, you guys, because guess what? How's the real estate market in Montgomery? Yep. So we walked through Montgomery. You may have missed that slide, but you can kind of go back and catch the recording. But overall, Montgomery, I would say Montgomery is definitely the cheapest market of the 4 when you compare it to Huntsville, Birmingham, and Mobile. And also, but you have the largest days on market as well too, and the lowest price per square foot. So you want to kind of think about that. If you're going to be doing like fix and flip projects in the Montgomery market, you want to look and you want to be in the hottest zip codes. You want to dive in a little bit more into the data specific to Montgomery and see what areas are selling the fastest within that MSA, because you want to focus in those areas where you're not doing or having a project and you're having to sit on it for 6 months. Just because you're not getting any offers, nobody's really looking to move into the area. So there's always hot pockets, even in a market that isn't as strong, but you really want to focus on it. And I would imagine that you're probably going to be on the east side of Montgomery, close to Gunner Annex, or you're going to be a little bit further out. What is that? The Taylor Road, that area there off Exit 9, kind of going on Highway 85 toward Auburn. Those areas are where you want to kind of focus at, where you have the good school districts. Especially when you're doing fix and flips, you really want to focus on the schools. That's going to be a powerful driver where the people that are coming in, and you want to also see where are the houses selling the fastest and what zip codes. And now you want to look to be able to pick up properties in those areas and kind of go. Oh yeah, Prattville. Somebody said Prattville is a good area. Yes, Prattville is solid. Prattville is a solid area as well too, and which I think Prattville probably is included in the Montgomery MSA since it's right there as a we call it a suburb of Montgomery. But yeah, Prattville is a great area. Really a really great school system. So a lot of people choose to move there. That's working or around the Montgomery area, especially a lot of Air Force people that work there in Maxwell or going to school there in Maxwell, that they choose to kind of live in the Prattville area. Joe said, "Where can this data be retrieved?" That's a good one. I think, let me see. Should be city data, city-data.com. Yeah, I think it's city data. You guys gonna make Joe, you're gonna make me go off the script, but I'm gonna go ahead and share my screen and kind of dive in. Because that's a great question. Let's see. Let's get this. We're gonna share. We're gonna teach tonight. And dive in here. Here we go. Share screen. Boom. So with the city data, we're gonna dive in. So the big one, I don't think they're gonna show like the real estate data, but one of the big ones that I can tell you that drives where most people are at is the median income. And so let's dive into Montgomery. So here, zip codes. And so with city data, it breaks down like the average median income. You can see crime. You can go through and see a lot of the underlying data of the market. And so here we go. Yeah, we can dive in. And so the darker blue, there we go. It's gonna kind of be, you can click in and so it'll show you, zoom out. Uh, it's gonna give you the, why is it not popping up here? Ah, there we go. So median income, median household income right there for this zip code is 120,000. This one 39,000. So when you look at median income, it's going to drive kind of where the wealthy areas are in the area. So we'll zoom out. Let's see here. And so where you want to focus for, like for if you're looking for rental property, you want to be kind of between 40,000 and 75,000 for the median income for the zip code that you're buying in. Because anything less than 40,000 for the median income, you start running into higher delinquency rates. You start seeing a lot of different challenges with unit turnover and things like that. And so you want to kind of avoid that. So if we go right here, I think this is I-85. There's a little, yep, it's I-85 here. And so if you look here, this area here, this is East Montgomery. So if you keep going right, you get to keep on out to Auburn if you continue east. So right here, you got 82,000. I know this is a real, this is like going towards Highway 82 that you get 90,000. It's probably higher here. Yeah, 117,000 because you got some huge kind of McMansions out here as you get out here to 82 to kind of head out of the city. And so all these areas here, there you go, 156,000 for the median household income. So if you flip anything out here, you get in this area, you're gonna be really, really good with the 82,000. So anywhere in these areas here, these subdivisions, as you move back towards the city, like here, you still have some good pockets here. What is that? 53,000. So that's okay. That's a strong blue collar neighborhood here. But as you get back here downtown, here's Maxwell Air Force Base. So right outside the Air Force Base, you got 33,000, and this is 11,000. You got dilapidated areas here, so 8,000, and so there's not a lot of wealth here. So these areas you probably wouldn't want to have rental property here. It's in this part of downtown here starting to turn over. You got the governor's mansion in this area is kind of being gentrified, 14,000. But you want to kind of come back up here to the east side of Montgomery, and we have our apartment complexes. What is it called? Yeah. So over here in this area, but you start getting back into the 57 in this area as you get out here on the east side of the city downtown and focus on that. So you dive in, look at the median income, and then you can go to Redfin and kind of break it out by zip code. Show you guys this real quick. So we do Montgomery. If y'all drop something in the chat, if y'all getting value from this, just kind of digging in and see how you can use data to make decisions, especially investment decisions on kind of where to look. And you can do this in any city in the U.S. And so, market insights is kind of when you go into Redfin, that kind of gives you the data that they have and what they're looking at, what we talked about tonight. But I don't think they give you like a zip code break. Yeah, so you won't be able to get that just a normal view right here. But one of the things when you're diving in, let's see here, options, map options, amenities, schools, flood, hidden, estimates. So you can add estimates on here, but you can kind of see this area here off downtown. You can see what the prices of the houses are when you get here, that you're seeing some 29,000, 9,500, 30K, 35K. As you see the houses here, 150, 285 as you start getting east. And then when you get back out here further east, towards 231 here in this area, that you got 224, 160, 398, 95,000. So like I'm just looking at 95,000. What's that? See, one of the things you can start looking at is like, okay, when you can see like prices out of place, you got 749,000, but then you got some for 75K. It's like, okay, that's a good area. You got 1.4 million, 389, and now we got 75,000. So that might be a quality house because you look at the area around it. It's like you got nice real estate all around the area. So you want to maybe want to dig in. You got 58K right there. Okay, that's raw land. But you got $1 million. Is that raw land? Okay, 5,000 square foot home with only 3 bedrooms. Like who designed that? That make a whole lot of sense. But yeah. So you want to dive in, you can look at things from the map and start seeing like trends, and you can see houses that stand out, whereas like prices, there's a huge gap in the prices. And now you can just dive in deeper into the data and kind of see. Yep, no, great questions. Great questions. And in doing that. And then for like those that, for us are looking want to like a free strategy session, maybe you're trying to bounce off some ideas and you're kind of figuring out like, hey, I don't know, maybe what's the next step for me, with like maybe get ready for retirement, or how do I scale up? I got one or two rentals and like I want to get into multifamily space, and you want to kind of have a strategy session with myself or Coach Jessica to kind of talk through, hey, what are some tips, some points that we can give you to kind of help with your strategy, then we would love to kind of get some time with you. You can go to the link right there and just schedule a 30-minute free strategy session, and we'll walk you through that. And then, if you're a good fit for what we have right now in our community and you're really serious and committed, we'll talk about my 6-month mentorship, what that looks like, and share that with you. But yeah, so right there, you can go to the link and sign up for that. As we wrap up, any questions tonight? I think this was good. This was good. The data really surprised me. I really like Mobile. We're making some tweaks and changes with what we're doing right now internally in my company in regards on the single family side with what we're doing with scaling up The goal there is we want to do kind of stay consistent around 10 projects between Panama City and Mobile, not Mobile, but Alabama, across Alabama. But I'm really focusing on Mobile. I think that's going to be a big one that we look at, just because those days on market, we're following the data that it really doesn't make sense to kind of scale and do a lot of deals in Montgomery in the single family space. Right now, the rental market is really good on the multifamily side, and Huntsville is super competitive. But I think Mobile is right there, is showing that it's kind of the sleeper in regards to where things are going. So, with that being said, I appreciate everybody tapping in tonight and tuning in. You got any questions? You guys know how to find me. Shoot me a quick message or something, or message my team, and we'll get back with you. And yeah, definitely take advantage of the free strategy session to kind of see where you're going, because I think that's the biggest thing, that a lot of times we go through life without a plan, without a strategy. We don't know what we're doing, and we look up at the end of the year and we're the same place we were at the beginning of the year. So don't let that happen to you. Don't leave 2024 how you came in it. Don't come in with the same amount of assets that you're coming out with. Don't come in with the same amount of passive income that you came into the year with. Take action. Do the things that you need to do in order to move the needle in your life and finding that time freedom, that financial freedom. And it just starts with a decision. It starts with a decision. And guess what? If you pay the cost today, you'll be able to pay any cost in the future. And that's all about sacrifice and having the discipline to show up for yourself day in, day out, and doing the work. And with that, the sky's the limit. The sky's the limit. Thank you, Tracy. Thank you, Tracy. Glad you were able to tune in. Surprised at all of the data. Yep. This is good data. Alabama's a good market. It's a solid market, good fundamentals. It's not Dallas, Texas. It's not the Atlantas, the Austin, Texas, where Austin has really pulled back, or Nashville, but it's solid. It's a solid market, and the price per square foot is still reasonable, and there's still deals that cash flow in the market, which is what we're looking for. Because guess what? If it doesn't cash flow, let it go. Is what I always say. So yep, no, I definitely. Somebody said they love the Alabama market for sure. But guess what? It all starts with one deal. You got to do one deal. You got to start and take action. And guess what? Once everybody that has done 50 deals, 100 deals, they all started with one. Like, you're only looking for one deal out of we talked about in Birmingham, what it was, 250 houses sold in December. You're only looking for one. And so if they keep that average, if it's 4,000 houses that sell in the whole entire year, you only need one of those 4,000. And that's what it starts with. And so that's the thing that you got to focus on, is getting that first deal, and then just continue to move forward from there, and just understand it. So that's it. I'm about to wrap up. I got to get my slides done for Houston, Texas. Those are due tomorrow, so we're going to get those closed out. Houston's going to be great. I'm really, really excited about that. We're going to have 150 people in the room. There's still a few tickets left. So if you're interested, I won't say interested, if you're committed to real estate this year, it's going to be a great event. We're going to have some downtime. We're feeding you. You're going to have food in there. You don't have to leave the facility at all. That it's just going to be real estate overload. And we're going to be diving in, talking about different strategies on how you become the bank, how to get started multifamily investing, how to start raising private capital and bringing other investors in your deals to create win-win situations and all of that. So if you're interested, definitely just shoot me a message. I'll share the link with you for Houston, Texas, the 22nd through the 25th. And then also in the Birmingham market, the Alabama Commercial Real Estate Conference is going on the 22nd all day in Birmingham. So definitely check that out. That's going to be a great event if you're interested in the commercial real estate space when it comes to Alabama. And I love it. I'm going to be there for the morning, and then I'm headed out to Houston. But it's going to be a great time. And and go from there. So you guys have a great night. It's been real. And guess what? We'll see you next week. We'll see. What's next week? It's Valentine's Day on the 14th. Let's see. I don't want to get in trouble. Is Valentine's Day next Wednesday? If it is, you won't see me next week. And we're gonna have a guest. We're gonna have a guest on the 21st, because I'm gonna be in Montgomery the 21st, the day before the Alabama event on the 22nd. So so it'll be a couple weeks before you see me. So see me in Houston. I would love to be in Houston. We're gonna have kind of a small meetup as well for all my REI geniuses in there. That's gonna be in the room. So that's gonna be super dope, and do that. So no meeting next week. We won't have a live next week. with Valentine's Day. But yep, y'all continue to reach out and let me know how we can help and how we can serve you. And we'll see you on the next video. Let's go. Let's make some equity happen, y'all. Be blessed.